What is going on, investors? Hopefully guys are doing well out there. It is time to talk about Nike, ticker symbol NKE. The company just came out with their earnings and we'll get into them. We'll take a look at the revenues, the profits, the growth rates. We'll talk about all those things broadly. We'll get into this from a technical perspective as well. We're seeing in the after hours, after this stock traded off by about 2% during the regular session, during the after hours, it's gotten that back and more. And so we'll talk about this from a technical perspective as well. I've got to talk about NFTs, or the fact that the Metaverse, the fact that Nike is making a big push into this. And we'll talk broadly about the acquisition that they just made. We'll also talk about that from a financial perspective as well, because I think it's kind of fun to talk about digital shoes, but let's talk about it from a revenue and a gross margin perspective and see how much that will impact Nike. And talk about, is that even priced into the stock right now? The fact that this company could start selling digital goods at a super high margin, is that even priced into Nike stock? We got to talk about that. Then we got to talk about some of the other reasons why I think you probably want to have Nike in your portfolio, and probably near the top of that list is this dividend growth rate. So we'll talk about the dividend growth rate that they have achieved over the last 2 years. And then when we look at the financials, we'll see if it's able to continue to achieve that dividend growth in the future. Now, over the last year, stock's up 14%, not a major winner over the last year. But look, you stretch this out to 5 years and the stock pulled forward a ton of gains over the last year, up 216% over the last 5 years. And that doesn't include all the dividend payments and the dividend increases that you've been getting on this one. $255 billion market cap. Will come back to the fact that they pay $1.22 per share on that dividend. Now, we've got a forward PE right now of 45. That might seem kind of expensive, and I would argue, yes, it probably is. I've got a price to sales basis, a 5-year chart here of Nike, and we're trading north of 5.5 times sales on this one. And certainly historically, if you've been in this name a long time, it looks expensive, but we will talk about the fact that they do have this upcoming growth rate, which I think can be exciting for investors. Whether or not it works out, to what degree it works out, I think is up for discussion and is up for debate and is truly a mystery. But this whole metaverse idea that we are going to create an alternative universe, in whether it's in the form of putting on these Oculus glasses, or maybe it's a mix of our phone and maybe like a kind of a video game, well, we can start buying Nike sneakers and start outfitting our digital avatar in these Nike sneakers. Now, Nike is really centering themselves around this business. They just acquired a company called RTFKT. Maybe there's a cool way to say that. Certainly I'm not cool enough to know, but the terms of the deal were not disclosed. But this company was founded in 2020, and it's a creator-led brand that uses the latest in game engines, NFTs, blockchain, authentication, and augmented reality to combine with manufacturing expertise to create one-of-a-kind sneakers and digital artifacts. So Nike is going to pair their brands, their Jordan brand, their Nike, their Air Max, whatever brands that Nike decides to throw at this thing, and soup it up to a certain degree. So we'll see what happens there. We'll talk about this more when we get to the financials, because I want to talk about, just throw out some really rough numbers. Like if Nike did $200 million at a 90% gross margin, or, they did $500 million at a 90% gross margin in digital goods, we'll talk about what that means from a financial perspective and a valuation perspective as well. We talked about this price to sales basis. If you've been in this name for a while, well, it's a little rich right now. Wouldn't necessarily be super excited if you're like me. I've been in this name for a very long time. This is actually one of the longest holdings I've had in my portfolio. In fact, it stretches longer than a lot of FANG names that I have owned in the past. Now, one of the reasons why I absolutely love Nike is the fact that, number one, they're a brand. They're able to put a simple logo on a sweater or a pair of sneakers and charge twice as much as a competitor. I love that. I love Starbucks for that reason. Apple, to a certain degree, is probably in that same vein. And maybe even when you look at a Tesla in the future, I think they'll probably have that brand power as well. Nike separates itself by the fact that we've got this dividend growth. Imagine back in November, this was just a month ago, November, Nike announced that they were raising their dividend by 10% 10.9%. Imagine getting a 10.9% raise back in November. And guess what? In the previous November of last year in 2020, you got about a 12% raise. So Nike is raising this dividend by double digits year after year. That is super powerful. So if you can get this stock at a good price on the dips, make a good judgment on when you buy this one. I tell you what, that buy and hold investment on that dividend will absolutely pay off with Nike. And that is why I've held this stock for a long time, quite frankly, really because of the dividend. But there's some other reasons as well. Let's jump into these numbers as well. We've got 3 months ended here. Our left-hand column is our most recent year on the quarterly basis, and the 6 months ended on the 2 right-hand columns. That kind of middle one is our most recent 6 months. We'll focus on the left-hand column because I see revenues basically coming in flat. We see growth of just 1%. You went from 11.24 billion up to 11.5, all intents and purposes. You're right, a shade over $11 billion worth of revenue. So the revenue growth, not super exciting over at Nike. Now, they probably came into some tough comps. Like a lot of people, there was a lot of demand pulled forward during the pandemic. Okay, people got a lot of stimulus checks. Also, people weren't shopping, people weren't traveling. They weren't going on vacations. They weren't eating out at restaurants. And so they had a little bit more money likely to buy Nike shoes, and people were working out at home, maybe changing the outfits that they were working out at home. Nike pulled forward a lot of demand. And then certainly when you look at the stock chart on Nike, boy, it pulled forward a ton of this price action as well. So things have started to go sideways with Nike. Certainly when we look at this from a technical perspective as well, it started to go sideways, and that is what's happened to this revenue growth. Now, what is not going sideways is our cost of sales. This is really surprising. So we're talking all about inflation, having supply chain shortages, supply chain disruptions. Look at this, not impacting Nike at all. Look at this, cost of goods went from 6.4 billion down to 6.1 billion. I'm loving this. Okay, if we can combine this with some strong revenue growth in subsequent quarters, oh my goodness, the stock's probably undervalued, honestly. Okay, look, your cost of sales actually went down by 4%. So what does that do? That drives up your gross profit. So despite the flattening of these revenues, our gross profit actually went up by 8% from 4.8 billion up to 5.2 billion. That's 45.9% gross margins on the physical goods that Nike sells, the sweaters, the shoes, the socks, all the apparel that they make and equipment. Now, here's broadly, we started this show talking about NFTs, talking about digital Nikes. Here's what I want you to start thinking about as an investor, okay? 45% gross margins on the physical goods where they have to make them in China or wherever and fly them here in the United States or fly them throughout Europe or throughout the world, quite frankly. Nike is a global brand selling their goods all over the place. You can imagine how expensive that is. Now, you can imagine how much bigger the gross margins will be on a digital Jordan, a digital Nike, a digital whatever it might be. Look, they're going to be absolutely fantastic. And so I don't know if you can double them to 90%. We could probably safely get them into the 60, 70, 80% range. So that's what I want you to start thinking about as an investor. Okay, will we ever have $11 billion worth of revenue from digital goods? I think this stock is wildly undervalued. In fact, you probably should go all in if you think that. I don't think that's the case, but imagine if we got $500 million worth of revenue at a 70 or 80% gross margin. All of a sudden, you're talking about a massive business. Certainly, as we run through these costs, I'll talk to you in a minute about just $100, $200 million, $300 million in a quarter on digital goods, what this will do to this company and its valuation. Let's get to there in a second. I did want to take a look at this demand creation expenses. This is all your endorsement deals. These are all your advertisements on TV. They call it demand creation expense. It's basically marketing. That's up 40%. Understand that this time last year, a lot of sporting goods, a lot of sporting events did not have fans. Nike was not sponsoring as many as those things. There was less sports on TV to a certain degree. And so certainly Nike wasn't spending as much on this demand creation. Now that is obviously roared back, okay? You went from 729 up to $1 billion, more normalized rate, quite frankly, for Nike. And you see that's up 40%. You see for the last 6 months, they spent 1.9 billion, which is showing you they spend about $1 billion a quarter just on marketing, okay? Operating overhead expenses, this is is all the employees and all the stuff that has to do with that, that's up just 8%. That's pretty good as well. When we're talking about inflation, we're talking about wage inflation, and we're talking about employee wage inflation. For that to be just up 8% year over year, not necessarily a bad thing. 2.5 up to 2.7. So you take this 5.2 and then you minus off our $3.7 billion worth of cost. You do pay a little bit of interest income, and you get your net. It will just flow all the way down to net income. Okay, we'll factor in income taxes as well. You come down here to $1.3 billion. You're up 7% on that net income side. Again, mainly driven by the fact that you actually drove down cost of sales, which drove up your gross margins, okay? Which in this environment is very impressive. The fact that they drove up their gross margins when you look at all the ships that are still in the seas that are trying to unload goods, certainly some of it happens to be Nike's, and the fact that they probably had to air freight a lot of stuff instead of sending it over on a boat. They actually had to get it onto a cargo jet, which typically is more expensive. The fact that this company actually drove up margins by over 2.8% in the last year, that's absolutely fantastic. So that drove our net income up about 7%. We earned 83 cents diluted. Now back to the dividend, you earned $1.98 just in the last 6 months. Just in the last 6 months, you earned $1.98 at Nike. And the fact is, this company pays $1.22 for the whole year on that dividend. So you better believe next November, you're likely to get another 10% increase on that dividend. So here's what I want to talk again, just lastly, before we get into the balance sheet and some of the other financials with Nike, is these digital goods, if they can contribute $100 million, $200 million down to this net income side. And again, at a 70, 80, 90% gross margin on that product, I can imagine that's why Nike is investing heavily on this, because like I said, if they can make 45.9% gross margin on physical sweatshirts, well, you better believe they're going to make way more than that on a digital Nike. They will have to do some upfront expenses like creating those things and acquiring companies like this, but the gross margin should be fantastic. So imagine if we take this $1.3 billion and when the metaverse is kind of built out and people buying digital Michael Jordan shoes and digital Nike sweaters, what if you added another $100 million to this? What if you added $1.3 million? Well, look, that's like 10% of that. Okay, what if you added $10 million to this? What if you added $20 million? What if you added $200 million, $300 million? Well, you can start to see that this company could really, really clear a ton of money to this bottom line if this metaverse, if this digital Nike NFT stuff continues to take off like many believe. So that is, and I don't think this is necessarily priced into the stock with Nike. And so if we start seeing that, I think we could see this stock start to push to all-time highs if we start seeing evidence that those digital Nikes are really taking consumers and they are buying those things to a heavy degree that really impacts Nike's earnings. And again, we don't need a lot of sales at a high margin to really impact the bottom line at Nike. That's why I'm excited about a Nike when it comes to Metaverse. Whereas with Facebook, they already do $25-30 billion in a quarter in revenue. They already have, they're wildly profitable, $10-20 billion to the bottom line over at Facebook. That company already makes an extraordinary amount of money on that bottom line. That's why I'm actually more excited for the Metaverse for companies like Nike, is because I don't think this stuff is priced in. And this is a company where if you add just 10 million, 100 million, 200 million down to that bottom line, you can re-rate this stock completely, okay? And that's why I'd be excited about Nike going forward. Now, cash and cash equivalents, company's got plenty of cash, okay? $14-15 billion worth of cash. They've got this $9 billion worth of debt, no problem. Nothing really to see there on the balance sheet. Actually, one thing that I did want to see is inventories over at Nike's up 7% at the end of November. So not necessarily a good thing, not necessarily a bad thing. You went from about 6 million up to this 6.5 on that inventory side. So we look at that in the fact that maybe they're not selling through as much because towards the end of November, okay, this was just a couple of weeks ago, you'd expected Nike to kind of burn through most of their quote Christmas kind of stock up inventory, but not necessarily a bad thing. An extra $500 million in inventory over last year, not necessarily something that is telling me in subsequent quarters maybe sales won't really come in. I think the way we're looking at Nike right now is their sales are going to be relatively flat for in the forthcoming future. It's really those growth drivers like those digital goods that really will drive things. Now, one thing that I saw that was disappointing when we look at the different segments of geography is Greater China pulled back by 20%. Okay, something's going on in China. I'm sure some of you probably can understand this a little bit better than I. And plus, when we look at China, I tend to see this. Okay, you see demand get pulled forward in China, and then it kind of takes a step back, and then it gets pulled forward and takes a step back. It's a little bit less steady growth as when you see maybe like a Europe or certainly like a North America. You see over the last 3 months, North America actually grew 12%. Europe grew 6%. So this Greater China actually decreased by 20%, and APAC and Latin America actually decreased by 8% as well. Now, from a technical perspective, Nike is not doing anything unfamiliar. Okay, this stock actually had a monster run like a lot of stocks. It bottomed out back last year in March, pulled forward a ton of growth, and then actually went sideways for a long period of time from about October, September of 2020 up until about the summertime, June of this year. And then I think they reported earnings and this thing gapped up. So we traded in a tight range between about 124 up to about 145. And now we're simply just trading in a new range. We're trading between 145 down here and the top of the channel is 175. So if you want to trade this one, you're selling up here at 175 and you're buying it as it gets closer to about 150 on this one. On the bull case scenario, like a lot of stocks we've been following, you're looking for a breakout above 175. You break out above 175, probably even more specifically, you want to get closer to about 180 on this one. You start putting candles up above 180, and this one could potentially be on a upward run. Okay, now we would not necessarily expect that. I would actually expect this stock sitting right now at a 160. I would expect it to come up here to the 170s and probably get rejected and pull back if you want to acquire this one for the dividend growth rate. And I also think the upside on these NFTs and digital goods at a super high gross margin, well, I think you want to get it on the pullback. You want to get it south of about 155, probably more specifically. I'd like to get this one south of 150, or actually right here at 150. There is a big gap here. We did pull back underneath 150. Whether or not it can pull back to this level again, obviously we're seeing markets under pressure to a certain degree, and that can impact stocks like this. Whenever good stocks go down with the rest of the market, I like to pile into them, or at least, at the very least, add to my positions. Now, I haven't bought Nike shares in a long time. We're talking years now, but based on this dividend growth rate and the fact that these digital goods, this is something that I'm going to do a lot more research on over the coming weeks and certainly months ahead. If I believe this is the next growth driver, I believe that people are going to be spending money on digital Nikes, digital goods, maybe a digital upgrade. Maybe you buy a Nike sweater and for an extra $5, you get the NFT or be able to wear that on your avatar. Well, look, if people seem to like that and Nike starts driving sales towards that, that is what's going to take this stock to the next level. Because as we saw with those revenues out of China, they'll fluctuate a little bit. Certainly here in the United States, they're starting to flatten out. Over in Europe, they're starting to flatten out. From a company-wide perspective, they absolutely went flat over the last year. I don't necessarily see anything that's going to drive that higher until we see some innovation. And I think right now on our doorstep, the NFTs and the digital goods in the metaverse certainly is that. So hopefully guys enjoyed this video. We'll be back again soon with more. Good luck with your investments.